Hi, thanks for tuning in to our Practical Nerds weekly podcast. I'm Shub, and together with my partner and co host Patrick, we normally invest in founders in design, construction, renovation, and logistics technology. Many of our friends in the ecosystem wanted us to start a podcast on the built world, and in return, we decided to honor their request with a show about nothing at all. Hey Patrick, we've rolled into episode number 59,
Ooh.
right? You know what's one of the cool things about 59?
I have a feeling I
bet
know
you
what
didn't
you're
see
going to
that
say.
coming. I bet you didn't see that
Yeah,
coming.
yeah. Well done. You saved. Okay, so I know what you're going to do. You're doing a clarification on earlier episode, and you waited all the way for 59.
Yes, that's right. Because look, by the time the clarification was given to us, we were already into the mid 50s. So I waited until the first prime number came along, which is 59. So I wanted to address something which came in as a comment or a feedback from one of our regular followers. Let's not name the person, but thank you. And what they clarified is that we've done a few episodes now on the prime numbers, but the one where we featured it on prime numbers and execution mode. We described, if I remember correctly, Patrick, we spoke about how the only way to figure out whether a number is prime or not is to first get to a sequence. You figure out where the next prime number comes from. So this follower of ours clarified that that need not be done. However, what still needs to be done is for each prime number, you need to manually test whether it's a prime number or not. Which, if you think about it poetically, if you go back and listen to that episode of ours, it still beautifully fits in with the overall message of execution mode, because you can still only figure out the validity of what you're trying to achieve once you get there.
Yes. Sorry. Yes, and so first of all, kudos to you and to us that we're being held honest here, and we're holding ourselves honest. But I will also say, so I think it was a little bit misunderstood, and maybe we phrased it poorly. But actually, what we said is still true, in my opinion. So what you cannot do is basically even you cannot generate primes in a way where you can always know that the prime that you are generating has no prior primes. So in that sense, you need to actually jump from prime to prime in order to make sure that you have the complete set of primes up until the one that you just generated. So in that sense, it is a sequential approach that is required in order to generate a complete set of primes up until number n. So that there's no known method to actually then generate a new prime through sieves or whatever, or other deterministic approaches, and know that this is the latest one and everything else before that has actually been captured. So
nice.
Good. That was a good episode. Thanks, Shub.
Indeed. Is that it? So are we done? But
yes.
hey, staying on the theme of keeping ourselves honest, reflecting on what's come before, I think that led us down an interesting path on memory lane from the times we started Foundamental and how things have evolved. And I think we were realizing, hey, when we started the first year and a half at Foundamental, there are all these different clusters of companies and opportunities, which at the time were perceived as being hot, super hot, extremely exciting, etc. So what ended up happening? And I think that was a interesting exercise. So I think we just put together a set of opportunities or spaces or themes that at the time seemed very overrepresented for some reason, and just use it to provide commentary on how some of them evolved.
Yeah, so we sat down and actually asked ourselves, when we started Fundamental January 19, what were we pitched? And so we came up with a list of, and this is like a 2 minutes exercise that you and I did. So I'm sure if we did it more sophisticatedly, then the list would be a little bit more solid. But just by memory, this will be 80-20, correct? Let's start with the first one, Shub.
Yes.
We were pitched a lot the next Katerra. And that was not only 2019, this went into 2020 and 2021. And we did also dabble in this category. So it's not like, hey, we were immune to it, but we were pitched it a lot. Like that happened, on a weekly, some days maybe even daily basis.
I don't know if you realize this, Patrick, and I think that statement is still true. To date, Katerra is still the most funded construction tech company ever.
Is that right?
Yeah,
3
so
billion
they
something?
about at least according to Traxon, about 2.1 billion. Perhaps there's other rounds which haven't gotten properly recorded,
Does it
but
capture the debt?
depends.
Okay.
Not
Yeah, I think
always.
okay. I
Yeah.
have like 3 billion in mind, but that might also be
I think
wrong.
you may I wouldn't be surprised if that is the actual number.
I mean, it's a crazy amount of number, right? And so
Yeah.
if you top down, if you then look at it in the moment, and the company at the time was only, a few years old, oh my God, had raised several hundred million at the time, and then etc. Yeah, if you approach your craft from a top down perspective, and you're like, hey, what is easy to raise for, and then you come to the conclusion, hey, maybe I should build something like Katerra and pitch it like Katerra. Yeah,
Hmm.
that's how we ended up with a lot of pitches like that.
Yeah. I think there's still some pitches which go with that sort of description, taking different flavors and stuff. But I would say 2018 to 2020, especially, maybe a little bit of 2021, it was a surprisingly popular theme. Very,
Yeah,
very
very,
popular theme.
very. And you're right. There were a few different flavors. So and I think as time moved on, some of the aspects and characteristics became more narrow or more nuanced. So, for
Hmm.
example, the asset class that people would serve became more nuanced.
Yes.
Initially, sometimes it was just residential, all of residential. We saw a lot of ADU
Hmm.
related things because California at the time was beginning to nurture the permission of ADUs, etc. Um, and then that's one aspect that, what is the asset class that I'm serving? Another one is we did see over time into 2021 more asset light cloud manufacturing type propositions, which we didn't
Yeah.
see in 2019. So instead
Yes.
of, taking over a lot of the capex as well as factory utilization risks.
Hmm.
The early cloud manufacturers, for example, 011H proposed a more supply chain light approach. And to this day, 011H is one of the most interesting ones that survived from that onslaught that happened maybe the last 3 years
Yes.
post the Katerra wake. So that's another angle. And then we also saw some that actually went even more extreme. We saw companies that would not only build and own factories, but say, hey, we also want to own the buildings. Gropius in Europe was one like
Hmm.
that. Nokera
Yeah.
was another one that was heavily funded. I think also tried to go in that direction. In the US, I believe there were also a few companies like that. Assembly OSM comes to mind, which is also still going. An ex WeWork person that
Hmm.
had founded Neighbor in New York, which I think now has pivoted to Saudi Arabia. Try their luck there. And that was a very heavily pitched
We also had one from
subject.
the Philippines, if you remember.
Oh my
That
God,
was
how could
also
I
a heavy.
forget that?
Yes, that was also
Yeah,
along that theme.
self-proclaimed
Quite a
unicorn.
fascinating story. Yeah.
Yeah, that's right. Okay, so that's the first field we had written about it, and I think some of the things that we had written are still true today. Some of the things I don't think. We thought about how the digital general contractor for new construction would actually develop, have stayed true. I don't think everything was right. And actually, in that vein, let's continue with the next theme that we were
Sorry,
pitched.
before we go there, I think quick plug from episode 58, the most recent episode we did. I wonder if Katerra blowing up also spelled doom for the vast majority of companies doing this.
Oh, for sure. I think it was very
Yeah.
difficult then to continue just
Yeah.
fundraising on an unsustainable model. I don't know if you saw it, but Top Hat in the UK actually announced, I think, 50 million loss this week.
Oh, okay.
And they already, before that, there were news out there. Hey, the company is maybe in troubled waters. Let's see. So, yeah,
Hmm.
yeah.
Okay.
Sort of an adjacent theme that we were pitched a lot in 2019, 2020 was the digital GC for renovation. Think block renovation, made renovation, both
Yes.
two heavily funded companies. In India, LiveSpace actually
Yes.
preparing for an IPO. So it's not like everything didn't work out. We had Decoruma in Indonesia also in the portfolio, which we sold
Yes.
successfully and
Yes.
with a good profit for us. So tell me about this space. What was it about? And What do you think in hindsight?
Yeah, so it's interesting when you look at this space. So the examples you mentioned. So LiveSpace is an older company, of course, was quite mature by the time we started Fundamental. But
10 years
if you
old
look,
now.
yeah, that's right. So if you look at LiveSpace Decoruma, so they obviously looked at it as a full stack home design and home renovation platform, mostly for greenfield projects. So as in when you move into a new build or a new home to design it, mostly from scratch.
Which is very
The
common in Asia for the Western
Very
people
common in
listening.
Asia, yes. Like you get these raw structures basically, which need to be done up to make them ready to be moved into. What was contrasting this, and which is what led to, if you recall, very animated discussions at Fundamental. When you contrast this versus what we saw with the likes of Block and Made, and by the way, I think one of those two, if not both, are already under and
Made.
probably going through
Block is still
some.
going, but Made went
Okay,
into administration. Yeah.
I see. Gotcha. They were, if I remember, either only bathroom renovations or bathroom renovations with a bit of kitchen renovation thrown in as well,
Yes.
which I always, even at the time, was a bit interesting. I think the thesis was made out to be that, hey, we have this immense building stock. People don't want to buy new homes. People want to upgrade, etc. Uh, the interesting thing was, but it was all mostly brownfield work. For those of you not familiar, brownfield means doing work on an existing structure and just modifying a small part of it.
It
Oh
doesn't
man,
mean a
that
field of manure.
I mean, you never know, man. There's bathroom renovation involved,
The
but let's not go
metaphor
there.
might extend.
Let's not go there. But the interesting thing is, especially, and I don't know if the pandemic helped or worsened the use case for this. I think the claim made was that the pandemic is helping with people staying at home. They want to get things fixed up. But I think anecdotally, what we kept hearing as time passed is more and more people got more demanding with what needed to be done to get the bathroom renovated. You can't just sort of leave it in like unfinished state and move on, which was the problem with having contractors come in, etc. Uh, and I think eventually, it certainly seems like in the US especially, that model ran into too many operational difficulties more than anything else.
I mean, when we looked at the numbers of some of these players who were a bit more mature, I mean, we're talking negative contribution margins.
Yeah,
So it was like, the eternal overfunded promise. Hey, let me just get to scale.
yeah, exactly.
Okay, but on a scale basis, in a project business, how are you gonna make the project unit economics better because of scale? It's okay. But there are examples in this category that actually worked, and LiveSpace is a terrific one. I think LiveSpace published numbers recently, Shub.
That might be the case. If I'm not mistaken, I think their GMV scale. Uh, Actually, okay, let me not quote random numbers. On a fulfilled GMV or revenue scale, I think they must be upwards of 500 million.
Yeah,
But I'll have to check the numbers more
right.
recently.
Yeah. So that's a good one.
On delivered numbers, it's lesser. On the GMV, it may be higher on the bookings.
Decoruma in Indonesia was one like that. We had Tobato in China, which
Yes.
I think the Western markets don't look there, etc. In Europe, we had a bunch of those that maybe still going, but maybe not going along the venture scale that they raised for. Some of them actually went bust as well. So I think that not as easy a space, but we got pitched it a lot. Like
Yes.
again, on a weekly basis, at least back in 19 and 20. And then just maybe completing this trio of capital intensive type models that we were pitched a lot, Shub, is the iBuyer model.
Yeah.
Talk to me about that one.
Yeah, look, so the claim was that capital is available for cheap. There's assets to be bought, and because there's capital available, there's a lot of home buying demand. So theoretically, you as a institution or as a VC funded startup could jump in, buy, let's say, homes or structures that are kind of finished or nearly finished, touch them up a little bit, make a little bit of modifications, maybe improve a few things about them that you could that would lead to you being able to sell them at a premium and then try to quote unquote flip it, right? Quote unquote flip it for a profit. The claim was that, hey, in most of these cases, the work needed, which by the way also, for those of you might have figured it out, is also involves renovation at the end of the day. But the claim is that the extent of renovation needed would be minimal,
Yeah.
and the willingness to pay once renovated would be high,
Yeah.
or higher, enough to support, enough to justify the reason for holding these properties on your balance sheet. Because keep in mind, you need capital to buy these homes and carry it on your balance sheet until they sell.
Right. Right. So some of them had a I think everybody had their own flavor, and some of them actually then decided to focus, for example, on second home assets, holiday assets, like Picasso, Spencer Rescoff's next company, raised,
Yes.
I have to double check, $1 billion, something like that. For that, some of them focused more on apartments in metro areas. Some of them then decided to focus on short-term rentals for expats or like traveling enterprise workers. You see where I'm going with this, right?
Yeah.
So people then top down run, and founders and investors, I mean by people, then take the top down theme, and they're like, hey, this theme seems to have a lot of legs, but actually the signal you're using is fundraising. You're not using the signal of 5 years of terrific traction. And
Yeah.
I think founders and us as investors alike, we're both to blame when we don't properly factor in the market characteristics of, even if you have a working iBuying model, what is actually the reason why it works in this part of the market and why it might not work in the next one. I think that's something that I learned over my 7 years here at Fundamental, is I very, very much don't over amplify early success, especially not fundraising success. It means absolutely nothing. And then I want to see whether the market characteristics actually support, if it's a true success, if they support the copy part, or whether it needs its own ingredients actually, and maybe it only lends 1 of 10 ingredients. And I think I by and large, it was not a model that earned the cost of capital that it raised for. And this one might have raised more actually than the digital GCs that we just discussed.
The interesting thing about this model also, again, I think most of the ventures that pitch to us, if not all, quite often tended to downplay the renovation aspect of it.
Right.
Although, again, if you think about it, if there is no renovation involved, why would it sell at a premium?
What is the transformation here?
Doesn't really make sense. But
then it's a credit spread.
Correct. And okay, I'm glad you said that. Theoretically, if it's a credit spread business, the only moat, even theoretically possible, is money or access to capital. Other than that, there is no real moat, which is why I think there was a phase where you had lots of firms funded with enormous sums of money. And they all just needed to be on this constant treadmill of raising money to even be somewhat relevant.
And then let the credit spread move, 100 basis points against you.
Exactly.
And then, which is exactly what happened. There were interesting spin-offs of that too, right? So we had spin-offs of rent to own, what they called themselves fintechs. There was no tech in the fin here, but then there was like partial equity, for example, for retired people, which to me, I'm sorry, what you call partial equity, I call mortgage. Sorry, the financial product is literally called a mortgage. Like what? But okay, so luckily that ship sailed past us. Okay, so that was the iBuyer. I think another thing that we were now moving more to the stuff that persists more into today, but not with the next one, not quite yet. Quick commerce for construction sites. Companies like Renoran in the US was a famous example of that. They were more asset heavy than others with own warehouses. There were more asset light interpretations and avatars of that. In the US was actually the most funded and most liquid market for this model. Australia held maybe 1 or 2. In Europe, we had not too many like that. Those that did and actually had substance, I think, are still going, but they had more of a logistics insertion point rather than a quick commerce insertion point. And interestingly, Shub, handing the mic back to you, this quick commerce place.
Mhm.
We saw in construction before we saw it in food, actually.
Yeah, that's right. Very right. So you're right. The quick food or quick grocery, I think that really started inflecting once the pandemic took hold.
Yeah, 2020.
But interestingly, these opportunities that you spoke about, we saw a cluster of them between early and middle of 2019 and saw more of them
Exactly.
as the year progressed,
Exactly.
which was fascinating, interesting. And I think the thesis at the time, which again on a standalone basis maybe doesn't sound ridiculous, is that hey, if you're a contractor working somewhere, or you're on a construction site, you don't always have all the materials you've purchased because there's errors and so on and so forth. So you quickly need stuff delivered to you. And the claim was that hey, you can just order stuff and it gets to you in 20 minutes or so.
Yeah.
So that was the claim.
Small basket sizes, oftentimes
Yes.
like $100 to $400,
Yeah.
2 hours to 4 hours fulfillment.
Yeah. Keep in mind, so you're right. Uh, Even at the relatively small scale, some of these firms were offering, they actually had warehouses and the like
Yeah.
to actually stock up.
Sorry, I thought we call them dark stores now.
Oh yeah, I think back in those days that term wasn't invented, Patrick. I think you and I are coming from the prehistoric era.
Yeah. we got pitched that a lot. I would say not on a weekly basis, but a couple dozen a year,
Yeah.
I would say. So this one was a good segue because I don't, we didn't dabble in this space at all.
Hmm.
And this one actually was not because whatever, we didn't like we didn't get in, we didn't have access. We had access probably to all of them.
Yeah.
We just passed this one 100% truth. We passed on all of them because the economics of what a marketplace needs to be didn't work out. It just didn't
Hmm.
make any sense, which leads me to the next one. We were already in 2019 pitched a lot of marketplaces on a frequent basis, and
Yeah.
you obviously are the guru of construction tech marketplaces.
I mean, so it's actually quite fascinating, and it's like when I go through this list, what seemed cool, what seemed hot, what seemed not so hot, etc. in 2019. I think if we, travel back in time in 2019, early 2020, etc., before the pandemic, I don't think marketplaces at the time seemed like a hot theme, if you recall. It didn't seem like that would like completely revolutionize construction, which is quite weird how time changes these things and these
When we
narratives.
when we had invested in the first one, I think the most oft asked question that I received from other investors then looking at our company, yeah, but what's the tech here?
Yeah, that's right. Uh,
Which is funny because that same investor might have invested in iBuyers.
yes, indeed. Now, what I will say, which is quite interesting, I think uh, the way marketplaces are pitched, what they represent today versus how they were presented back then, it has gone through a full sea of change. I think back then, even with the founders, I felt like, but by the way, this is not to say that we don't get founders who don't have understanding of what I'm about to say even today. But even the best founders back then would not always clearly be able to articulate what is working capital, how
Hmm.
do you source, how do you build up more wallet share, etc. It was really in the early stages of trying to build up a deeper marketplace presence. Not to say there weren't marketplaces attempted prior to 2018, 2019, but I think it was the first shimmers of something nice being built. But
Hmm.
many a times founders didn't know in what manner to present the story to make it
Hmm.
particularly cool and attractive. So it
Hmm.
looked like a cobbled together business which is functioning well but doesn't look like there's any shiny parts to it, if that makes sense.
Yeah, I remember one that might IPO this year that in 2019 looked raw.
Yes. Yes, know that one, sir.
And so we were pitched marketplaces on a weekly basis, I would say. But yeah, the craft of how to actually make a marketplace work, how to maybe differentiate yourself or differentiate the whole model between a managed marketplace and a non-managed marketplace. And then even adding to that, something that I think all of us only later truly became appreciative of is the cloud manufacturing part
Yes.
of the managed marketplace. That's not something we were pitched in 2019 that
I
way.
can't recall. No, I can't recall.
Yeah.
Firstly, anyone coming up with the term back then, and I can't recall anyone conceptualizing that as a business model.
Yeah. Yeah, I think that the time then and experience of some of the eventual category creators like Inframarkets that work Equipment Share in the US, which actually
Yes.
predates Fundamental's founding date. So Equipment Share,
Mm-hmm.
if I remember correctly, was like founded 2015 and supposedly
That
a very
sounds right. Yeah.
successful
Yeah.
company. I say supposedly because I have never had any numbers on the firm, but I do have friends who are angels there.
Mm-hmm.
So those exist, but it took a while to actually figure out, hey, what are the ingredients in the model that are worth repeating, and
Yeah.
also what are the market characteristics that unlocked it. So to give you an example, right? So I got pitched in, I don't know, 22 through 24. Every now and then, hey, I'm the infra market of Europe.
Okay.
No, you're not,
Mm-hmm.
because in infra market, just talking about market characteristics here, one of the market characteristics that it is able to thrive upon, it's not the only one, just one as an example, is that you have unbranded manufacturers that are underutilized and you can build the cloud manufacturing model with them.
Yes.
In Europe, we do not have that in many, not all of them, but many of the building materials manufacturing segments. And so actually the one that I got most excited about, which to this day we haven't talked about, took its own spin on that. And saw with our help, I was very involved in the early year of that. In fact, I wrote the original thesis that then the founder took and ran with the market characteristics of the European market, which are different, and learned though from the overall model and then recombined the model in a way that it would fit the European characteristics. And in my opinion, it's working. But we haven't announced it. And I think rightly so. No need to telegraph your plans to your competition. So marketplaces, and this is one that maybe now that we're pivoting more into the ones that have actually generated successes. We skipped one, Shub, and just looking at the clock, we forgot 3D concrete printing. We got pitched that a lot. But let's not go there. And instead, from marketplaces, let's perhaps go to the field software. For example, the new Procore 4X. How was that back in the day?
So look, when we started, I mean, obviously Katerra was the most funded, but Procore was the most visible unicorn and also the unicorn positioned as the likely candidate to go for an IPO, right?
Yes.
So a lot of firms also thought, okay, you know what, that's the next story to emulate. So quite often we would get pitched Procore for X, where the X would be a geography, or we would be pitched simply someone trying to compete head on against Procore, or trying to say, hey, we are like Procore, but we specialize in so and so niche or so and so use case.
Procore has a gap in its product suite here, and that's what I'm doing.
Yeah. So that's what we'd get pitched. I think I would say in the vast majority of those cases, time has shown Procore has simply done all of those things. So kudos to Procore. So which I think the thesis that
for the US, I would say for the US
for
market.
the US, yes, sorry, correct. Or let's say for North America in general.
Yeah.
So Procore has definitely nailed that. For the other markets, I think the jury's still out. But yeah, I think we got pitched a lot of those software solutions, those field software solutions.
Look, I mean, there was PlanGrid, which, again, I mean, I don't think anybody would call PlanGrid a workflow, and especially not complete workflow, holistic workflow solution the way Procore is. It did certain parts of it very well, and exited for 875 million to Autodesk, according to my knowledge, at a multiple that the founders must have found very enticing, and maybe Autodesk in hindsight doesn't find as enticing anymore. But that was a big success as well. And then we had maybe
Building
depending
connected.
Also, in the software space, not necessarily field software, but there was FieldWire. Rumbix, I think, is still going, and Novate in Asia, which from an ARR perspective, I think is going very well. But, it's still, we have to contextualize everything. This is something that
Yes.
we were pitched already in 2019. And so the space as a whole raised a lot of attention, raised a lot of funding. I think it has also generated good liquidity. Did it keep all its promises? Maybe not. And we were really pitched that on a daily basis,
Yes.
like on a daily basis.
Actually, now that I remember, I think another thing adding to the field software promise was, I think Aconex got acquired in 2017 or 18, I
Yeah.
want to say.
Yeah.
So it was like a double hit of like big success
That's
of
good.
Aconex and Procore.
Yeah. And then Schneider Electric bought RIB Software here in Europe, which is the one of the European market leaders for 1.2 billion in around that time frame between 19 to 20, I want to say, maybe
Yeah.
21.
Yeah, that's right. Yeah.
So that we got pitched a lot. We also got pitched a lot staying on the field side drones, Shub. I mean, it's hard to even remember it because obviously drones also started maybe 5 years earlier already to be like a heavily funded and publicized topic. But believe it or not, in 2019, 20, we still got it pitched on a weekly, sometimes daily basis.
Lots of drones, lots of that's also maybe part of the same extended family, Patrick. Lots of visual analytic solutions.
Oh, yes.
For indoor environments, outdoor environments.
That's right.
Using proprietary hardware, not using proprietary hardware,
Reality
using purely
capture, all of
software.
that.
Exactly, right? A very large number of them. In fact, it's quite remarkable just how many different solutions, how many different flavors, reality capture, drones, imaging analysis, etc. That space.
Yeah. To this day, I actually get pitched some of them. They become more narrow. They become a little bit more segmented, but not so much a, let's say, truly new technology or a recombination of technology that is like super new. It's more like, hey, I'm going to apply it to an even, more narrow subset of a market. So I'm still getting pitched, not at the same frequency though. That was like very frequent back then. Yeah, and then the final one that we have here was actually design software. So in the space where Snaptrude sits, Speckle sits in that, Rayon sits in that. It started for us already in 2019.
Correct. So in fact, Snaptrude, I've actually mentioned this in one of the special Bricks and Bytes featured episodes that we had done. Snaptrude and Altaf, the founder of Snaptrude, was one of the very first founders I'd spoken to after we started at Foundamental, believe it or not. So the association is quite old. But what has interestingly changed, and I could not have seen the change being so profound and eventually coming. At that time, design software providers, not just Snaptrude, but others who were there at that time and until a few years later, everyone thought of it as single player, standalone solutions. That is how design software was conceptualized back then. I think it took until 2021, I want to say, when Figma specifically was breaking out in a big way for it to also affect the AEC space. And
that was 1920 when they broke
up. But 2018, 2019, 2020, it was all single player solutions. And I think while there was cool technology being built, there's only so much you can do in a single player context, and it wasn't addressing the root of many of the problems.
That's right. And I think out of the 9 or 10 categories that we discussed today, which were heavily pitched 6 to 7 years ago, this is the one that I would say the ratio between funding back then and outcomes it has generated is maybe the most or second most favorable, and it still keeps going. I'm seeing a lot of potential in this category, more so than I actually saw back then. Better founders, more funding interest, and because it's a high minimum feature set business, the funding interest sort of unlocks what you can truly do in terms of potential here.
Yes.
And it's substantial. It's like fundamentally sound what you can do with it. And if you think of it, it makes sense. I mean, the whole software for pre-construction, for computer-aided design, I mean, that's not a category that was invented in the last 7 years. That's a category that, was invented the last 60 and has constantly produced M&A outcomes and liquidity. It's just that the scale seems to be getting higher.
Yes.
And maybe the same can be said about cloud manufacturing and marketplaces. But the other categories here I would say, have actually, since we first started Fundamental and when we were pitched it a lot and frequently, and they raised a lot, they didn't realize the promise that they gave.
Yeah, I would have to agree. And I think sadly we'll find once the dust fully settles, the numbers won't lie.
Yeah. Yeah. Yeah, we certainly have one of these categories where I'm also like, I mean, maybe we should have let that ship sail. So, but by
Yeah,
and large, I think back then it was already, it's funny, right? So if you just stick to not over amplifying fundraising and short-term trends, and you look at like whether something is fundamentally sound and making sense, you can avoid a lot of, things that eventually don't turn out to realize the promise. And when Shubit, sometimes when people shout from the rooftops, this is the next thing, or we all need to go into that, it's like 9 out of 10 times the exact opposite. And 9
yeah,
out of 10 times, I already know how it's going to end as a story.
exactly.
Cool. All right. Thank you, sir. Good
Thank you,
episode.
sir.
Short and sweet.
Look forward to the next one.
Sounds good. Cheers.